closing beat, everybody. Happy Monday. How you doing out there? You having a good day? Well, the markets aren't having a good day, and we're going to talk about it here today. This is a quick show that we do called The Closing Beat to go over the good, the bad, and the ugly in the stock market, and of course we're going to cover that. We're also playing a game. It's called Guess the Dow, and you winners really deserve it, I tell you that. If you want to take a shot, tell me where you think the Dow will close next week. If you're the closest without going over, we'll send you a $100 gift card. If I could, I'd send you more, but legally that is all an SEC registered investment advisor is allowed to give to the general public or accept as a gift, and so we put it right there at the limit there. Take a shot, have some fun with it. It's not marketing or anything. Everybody, you guys can all attest to that that have played. We don't market to you or anything, but just a fun game that we play. We don't even save your information, to be honest with you. We're also Jazz Artist of the Week. Have you ever heard of Snarky Puppy? Really cool group there. It's quite a sizable group, actually. They've got a song that's called We Like It Here, and I thought that was a good pick for today, because don't we like the discount, huh? Some of you are out there like, oh no, man, I like a little discount, I don't like a big discount. Anyways, that's our Jazz Artist of the Week. We'll be covering songs from them this week. You get a chance on YouTube. They've got some great ones there. Snarky Puppy is the name of the group. All right, so let's talk about the stock market. The Dow lower by 2,000. That's not a typo. 2,015 points, 226 on the S&P, and the NASDAQ lost 624. If you look off to the right, you'll see percentages. We lost 7% across the board today. In fact, we got to see our first circuit breaker in a while. I remember last week, early in the week, I pointed out how the markets can fall 7%. The major indices can fall 7% in one day before they will stop trading for 15 minutes, take a break, and walk away for a little bit. They'll open back up, and if they fall an additional 6% or get to 13% down for the day, they will close another 15 minutes and take a break. And if they close 20% or more down on the day, that's when they just shut it down, turn everything off, and say, come back tomorrow. Thankfully, we didn't get there today. But anyways, I want to point out a couple things. I've got a lot to this day. If you get a chance, just somehow save in your phone March 9th, 2020. Have it remind you every year, every 6 months, just March 9th, 2020. Because the next time this happens, basically a 20% drop in the stock market, if you're a little nervous right now, you're going to laugh at the people that panic next time, right? You could say, I remember when I was so many years old in 2020 and the market did what it did. And so think about that, because right now there are older investors. I got to talk to some today that were like, I don't get it, man. What's everybody panicking for? And because they've been through this, right? They've seen the nastiness, and so this is sort of normal. I've also been given some stats in our Notes from Jazz email. I put out some stats to kind of show how this is normal still. We're still within a normal yearly pullback. Today maybe takes us outside of the exception there, but it's something to pay attention to understand whether this is something to really panic about or if it's something to get excited about. Also, if you're one of our customers, I would encourage you to watch our class, the Market Decline Statistics class that we did, where we actually covered every market decline in history, what happened during the decline, after it, how it recovered and everything. So you can kind of see that this is not outside the norm. I mean, it's shocking how fast it's happening, I'll give you that. But anyways, and Warren Buffett has a quote out there today. He was talking about the markets falling and how markets will do this occasionally. He's not panicking, or at least that's what he says. And his quote was, most people are savers. They should want the market to go down. They should want to buy at a lower price, right? So I want you to remember the feeling of thinking, all right, I'm supposed to like a discount. I get it. I'm buying cheaper. I get to buy more, but this doesn't feel good. It's not supposed to, all right? This is part of the game. And if you are panicking about your investments, purely, it means you are not invested correctly, right? I spend so much time with customers going, this is your goal. You've told me you want to shoot for this. This is how we're going to position your investments, your 401k, your IRA, et cetera. And so they're already prepared. Like, no customers panicking out there. Well, lots of customers asking for, to put money in and they want to buy this thing and everything. Where's the bottom? Yada, yada. But the idea is if you're invested correctly, we've already stress tested your performance against what the potential markets can do, right? So that makes the biggest thing there. I have a lot of advisor friends that call, and so Jazz Wealth as a company has more customers than the average advisor. And most advisors only want the real wealthy people, and they'll only deal with them, so they have less customers. And so they were all calling me going, dude, what are you doing? You've got to be just swamped and everything. And I'm like, No, I'm here. I'm having a good time. But people aren't panicking. People see this as a discount. I love it. I love it. I love it. It means that our teaching has gone really well. Anyways, let's talk about this. We got the circuit breaker off the open there. There's only 3 other times in history that we've gapped down or fallen down this much in one day, or gapped down as much as we did. I'll cover some of those stats a little bit later for you. The NASDAQ outperforms the S&P 500 today. The Russell 2000 by far the worst performer out of the group there. In our notes from Jazz this weekend to our customers, I'll give you a hint of what we talked about. We talked about the average absolute daily percentage change in the stock market. Prior to, let's call it Valentine's Day, the average absolute daily percentage change, meaning every day, what would you expect? If you had to bet on what the next day would generate, give me a range. If you would have said 0.4% plus or minus is the range. Prior to Valentine's Day, that would be a really smart guess. That would actually have been what we were experiencing, meaning that any one day had not moved on average outside of the 0.4% plus or minus. You know what it is now? Since Valentine's Day, it is plus or minus 3.5%, meaning the ranges are so much bigger, and I don't have to tell you that. You can actually see it on the charts. We can see what we've done here. Compare previous to the coronavirus sort of mess to now, and you see the daily ranges are much larger. That is going to continue. You're going to want to get used to that. The last time we saw a 2-week span of ranges this wide was during the financial crisis. Not before it, right? Not after it, but when we knew this was a real crisis. So really, really interesting there. And August 2011 was the second to last time. Well, it was technically the most recent time when the U.S. debt was downgraded. We saw a 2-week span where the average absolute change over a 2-week period, day by day, was plus or minus 3%. Really, really crazy there. Anyways, look at the stock market here. We're officially back in correction territory, meaning we have fallen more than 10%. And I got to be honest with you, if we trade below today's lows, we will have put and close there tomorrow, I should say. If we close below today's lows at any point going forward, we will have officially ended the 9-year bull market that we've had. This record bull market will officially have come to an end. So if we close anywhere below today's low, that's it. The bull market is over officially. They will mark it as such. They will say it on TV. It'll be all over everywhere. That'll be the end of it. So that gives you your line in the sand. That's good news or bad news, right? Take it how you will. The good news is we either put in a bottom right here and we're going to start recovering, or the bull market's over and we got a whole new round of things to think about there. So that's what we have there. Look, the average correction, meaning the average drop of 10% or more, between 10 and 20% actually, it's happened 7 other times in this bull market. So since 2009, we've been in a bull market, and 7 other times we've had drops of over 10%, but not quite 20%. And today we actually hinted at closing down 20%, which would have ended the bull market, but we didn't there. Kind of did what it did back in December of 2018. The average correction, meaning the average drop of 10%, but not quite 20%, lasts 78 days. We are currently looking at 17 days, right? So it shows you how fast this has happened here, which makes it, it stings a little more. I'll be honest with you. It stings a little more when it happens fast there. Since 1990, the average correction has lasted 83 days with, sorry, I think I said 73 a minute ago. 83 days with an average drop of 19%. So other than the number of days, we are doing everything as average or as to be expected, right? Well, we're just within 17 days. It's just incredible. Anyways, we look at the Dow here. You got the Dow down about 8% on the day. It's now down 11 of the last 13 days. Same thing here. We close below today's lows. That will be the end of the bull market. And to kind of show you, just if you want to kind of look through here, if I go to the S&P, I'm going to shrink this down just a little bit. If I just measure from the high all the way down to the low, see how that's perfectly 20%? You got to look at the top of my screen there, the third line. It says minus 20.03%. We hinted at breaking the end of the bull market today. Didn't quite do that, which is good news for you bull market fans out there. But that's where we stand. So when you look at the major indices, anything under today's low does the trick there. We have now had a plus or minus 1% day for the last 13 trading days. Something tells me that's going to continue. I've got some stats to share with you here in a little bit. Let's go through the major indices today in the Dow. Strength came in Walmart. It was actually positive most of the day today, but it did close down on the day by 0.6%. That was your better performer there. Verizon also sticks out with some relative strength. Only lost 1.83% on the day. On the downside there, it's going to be Dow Chemicals, 21% 21%. That is not a mistake, 21%. JP Morgan, 13%. Official waterfall drop there in JP Morgan. Caterpillar falling down to lows as well, losing 14% on the day. And CVX, anything oil related today, just decimated, right? Really horrible day for oil, down 15%. In the S&P 500, which is now down 15% year to date, and as you now know, nearing 20% off of its highs there. You've got Cabot Oil. Any oil company with very little debt, low production break-evens did well. Cabot Oil has the best balance sheet out of all of the oil stocks out there, and so that one is sort of getting the love. People that want to invest in that space are saying, okay, I don't know what's going on over here, but I know you guys have a good balance sheet. I know you guys have an extremely low cost of break even for gas prices in terms of production. And so that one looked good, and it was one of the better performers there. If you look in the auto parts stores, I'll mention this a few times. Auto parts stores did well. AutoZone higher on the day. Advanced Auto Parts, AAP, did hit new lows but closed off of the lows. O'Reilly Auto Parts did well in the S&P there. And so those were the better performers. On the downside, it's all oil related. Check this out. Apache Oil lost 53% on the day. 53%. If you don't have time to do fundamental analysis to figure out which companies have very low debt and really strong balance sheets, you can just look at the performance today of the oil stocks. Those that lost more are in more trouble than those that lost less. You got Marathon Petroleum down 46%. Today was a repricing of the oil sector, hands down, right? Everybody said, if I got to invest in oil, I'm going to do it in a way where I go with the strongest companies. These are not the strongest companies. Diamondback Energy lost 44% on the day, and they said that they will immediately reduce activity due to events in the oil market. That means the price war that they're talking about there. And so those stocks really weak on the day. Let's go over to the sector breakdown today. Every single sector today lost 4% or more. That's a record. If you're taking a look inside the sector, you've got the price of oil. We got to start there. Oil down 31%, basically on the open. Oil opens up at 6 o'clock on Sunday evenings, and I looked at my phone and I'm like, what? Whoa, am I losing my sight? No, it was down 30%, basically on the open. It did sell off a little bit more, losing, I think, about 32%. It closed down 26% on the day. Russia and the Saudis on Friday couldn't reach a deal, and Saudi Arabia over the weekend said, we're not going to back down. We're going to produce more oil, and we're going to lower our prices $6 to $7 per barrel. So they have officially started a price war there. The Saudis are at a price war with Russia, and the Russians are at a price war with the U.S. They don't want to give in to U.S. production, and so someone is going to have to flinch. At some point, someone's going to have to flinch. Russia is not breaking even anything less than $29. The Saudi Arabia, they can break even at $1. They're the best at producing oil at the moment. All they need is $1 per barrel. They can handle it, so they don't really care. They really have the upper hand here in terms of the argument with Russia. So anyways, got a price war going on there. Just a horrible day. The last time oil fell this much, we were literally at war, going to war. So the Gulf War, by the way. So very interesting. Bonds, the TLT had its best day ever on record on Friday, gaining 5%, and today started off with a new record day, but it did close lower on the day. You've got the 10-year. Just incredible to see bonds here. The 10-year broke below 0.5%, but it got down to 0.34%. Think about that. A 10-year bond paying out 0.34% a year. That is incredible. There are not even high interest savings accounts, but regular, like, credit union type savings accounts that pay more than that with no risk at all to just put your money there. You don't have to see the price fluctuate, right? I cannot believe what you see here. This is historic in my opinion. And the Fed, New York Fed increased their repo purchases to $150 billion from $100 billion daily. That's not weekly or monthly. That's daily. They are desperately trying to get a hold of the overnight swaps there. They're just not happening, right? They're having a heck of a time with it. And it is now priced in that next week. Next week is the Fed meeting. They're pricing in a 3/4 rate cut, 75 basis points. And so if they cut anything less than that, you got a market that's not going to be happy with it. So we'll find out. That happens next week, Wednesday. So we will talk about that. I believe the meeting starts on Tuesday, but that we'll find out on Wednesday what happens there. Okay, moving on here. I've got a lot to share with you. I just want to make sure we cover as much as we can on such a cool day. You got financials down 10%. Not a typo. That's the financial sector down 10%. Rates are out of control, right? You got next to zero rates here. And if the Fed does cut by 3/4 points next week, that essentially puts us back to zero, right? We'll be at 1/4 to 0.5%. I believe that would be their target range, 1/4 to 0.5%, if they cut by 3/4%. So banks just plummeting there. Regional banks taking it even worse because they see what's going on with the rates there, and it's not good for them. So obviously lower rates, if you like the rates, that's a good thing for you. All right, moving on. We've got gold up 0.5%, actually closed up 0.2% on the day. It is officially up 7% in the last 6 days. Flight to safety. That's all that's really going on there. And I found this interesting. If you look at China, China is down 2.5% since the virus started. That's it. That's not fair. So China down 2.5% since the virus started. Year to date down 2.5%. If you go to February 19th, which is right here, you can see that it is just barely lower than when the virus started, right? So all of this, and China is getting the least of the worries so far, at least in as far as what we've seen so far, only losing 2% on the day and recovering well off of its lows. We did not do that here. A couple more things, and then we'll get on to some stats I want to share with you. 5% of the S&P 500 is above the 50-day moving average. That's it. 5%. That's 27 stocks. It's 5% and change. There are only 8 stocks out of that group that have a 5% cushion, meaning they could fall another 5% before going under the 50-day moving average. There's only 8 stocks. The rest of them are right there smack on the 50-day moving average. So we could be seeing that come to an end there as well. Only one new high today. That was Clorox. It briefly hit new 52-week highs, added 1% on the day. 230 new lows. If you like stocks making new lows, you have no shortage of picks there. That is a one-year record for stocks making new lows today. 103 names lost over 10%, double digits for 103 names. The worst are going to be in the oil space there. So like Occidental Petroleum losing 52% on the day, Halliburton losing 37% on the day. Most of the double-digit names are going to be in oil. Your best performers, meaning those that did hit lows but then did okay off the day, your auto parts stores. So you got Advanced Auto Parts there. Hit new lows and then bounced off of those lows. And you had Genuine Parts broke to lows, still lost 3% on the day, but recovering off of the lows there. Also want to point out things like Dollar Tree had a great day today, up 4%. Dollar General had a good day today, only added 0.5%, but holding up there really nicely. The assumption with the auto parts and the dollar stores is that people are going to go buy cheaper stuff. If the economy really does get weaker, you're going to go to the dollar store versus going to Target, you know what I'm saying. And then you're going to go to, you're going to fix your car rather than get a new one, right? That's the kind of the old way of looking at it there. All right, so that is that. Here we go. So got a little stat for you here for tomorrow, right? Because the volatility is going to continue. It's not just going to dry up overnight. It's just something we're living with here, something we got to deal with. Let's take a quick look. So since 1950, how many times have we had a 5% down day or more? On a Monday in particular. So Mondays have a historical, they've done this more often than others. Meaning on Monday, if we're going to fall 5% or more, it's happened on Mondays more often than not. In fact, since 1950, it's happened 10 times on a Monday. It's only happened 5 times on a Wednesday and less on every other day. So there's a 100% increase from the second worst day to a Monday. We've had 10 drops of 5% or more. Wednesdays being the second highest. 100% of the time, when we have a Monday that has sold off 5% or more, the next day was positive. And so we pulled that data to show exactly how that goes. So every red day is the Monday that it fell, and I put the date in there for you. The first one was 9/26, 1955. We fell 6.62% on a Monday. The very next day, we were up 2.28. Obviously, we didn't recover the 6%, but it lets you know that that's you're looking for that wild snapback. It's not typically a little calm day. 6.68% in 1962. The next day, 4%. I typed that in there wrong. Sorry, that's not in the mix there. You got 8%, 6%, 6%, 8%, so on and so on. And you can see 100% of the time, the next day it is, we've seen a bounce. The average bounce, 4.2%. If you look towards the bottom there, the median, 4.65%. What's that tell you? I can't promise you that tomorrow is going to be a positive day, but I can say that the odds lean that way if you look back at history. Interestingly, if you look at Wednesdays, which is the second most common day for a 5% down day or more, every one of those days on a Thursday recovered, or didn't recover, but had a positive day on the upside there. So you've got things moving your way. I've got one other thing to share with you here. There's something we look at, some people call them different things, but I'll say it this way. The net advancing issues. It's a way of kind of measuring market breadth, right? The number of stocks going up versus the number of stocks going down. You take those, put those numbers together and you have a net positive or a net negative. So for example, if you had, let's say 500 stocks going up, 600 stocks going down, you would have a net advancing issue number of negative 100 for the day. Typically, that's what you see. You see a range that is in between 400 if you measure it this way. Anytime you have a string of days where the net number is plus or minus 400, outside plus or minus 400, that's considered an extreme. And so that's something that's actually measured. There are easier ways to measure it, and a lot of platforms just have a simple little tool that'll show you that. But what we did is we actually measured how often do we have a string of plus or minus days. So we set 10 days as our parameters and then said, what's the most we've ever had? 7 is the most that we've ever had. And so we said, okay, how many other times has that happened? 7 days out of 10. And then we wanted to see the market performance going forward. In fact, that has happened eight times, including now. That's happened 8 times since 1990. It's as far back as we were able to go. And if we take a look at that, the whole moral of the story is when you have these days of extremes to one side or the other, it tends to be marking more of a bottom than marking or than hinting at new lows. Here's what it looks like here. We just did a real simple graph to plot the number of times that happened, where we've had 7 at least out of 10 days. Well, it had to be exactly 7. 7 out of 10 days where we had net advancing issues plus or minus 400 outside the range. You've got twice here, twice here, twice here, and twice here. You can see that in every case, while it wasn't perfectly the bottom, it was very close to a bottom after a significant drop. So that's another something hinting at we may be overshooting here to the downside. And it's always at that moment where people are really kind of panicked. You know, they don't want to admit it. Some of you out there, right? You're a little bit panicked. You don't want to admit it, but you go, okay, I can't take it anymore, right? That's the bottom, right? So we've got a lot of this data starting to pile in that shows we're sort of overshot to the downside here. And we'll see. We'll see what happens tomorrow. Of course, you know I'm going to cover it, but just know if we close under the low tomorrow, that is the end of the bull market, the 9-year bull market that some of you have never seen a bear market. That would be the start of the bear market should we do that. So the magic number is under today's low in the S&P is what we'll look at there. Tomorrow we also have the Democratic primaries in a few different states there, Missouri, Mississippi, Washington, I believe Michigan is in there as well. Maybe Idaho is one of them. But so they call it Big Tuesday because there's just a number of states in there. Michigan being, I believe, the most delegate rich, as they would say. Anyways, I'll take a second here, try to answer your questions. I'm sorry I rattled off a whole bunch of stuff today. You can always watch the replay, slow me down or speed me up. But just wanted to make sure I got in all that stuff for you for what was a very exciting record historic day. I mean, this is like print the shirt and wear it proudly if you made it through it. So I love it. I love it. Oh yeah, Italy officially on full lockdown, not just that one part, but the whole country now. That just came out a minute ago as well. Yeah. Yep. Damage has already been done now with oil financial numbers. So there's going to be a lot of interesting things happening in oil, from dividends being cut. That's currently the highest yielding sector of the S&P 500, by the way. I was thinking about putting a chart together. Maybe I'll do that tomorrow. It's the highest yielding area, but does that remain the same? There's going to be a lot of defaults there. There's going to be a lot of bond defaults. There's going to be a lot of companies either having to merge or go under if this stays this way for very long. It's not doom and gloom yet, because we've been here with the price of oil and all these companies handled it and they made through it just fine. But at this pace, it could get really exciting real quick. Yep. Cool. most don't realize that the buy low typically works out to buy low, then buy lower and even lower once you really hate yourself. Yeah, the whole Ben Carlson. I love it. I love it. I love it. Can you guess negative for guess the Dow? You can. It would have to be at 0 for you to be the closest without going over. I believe it will accept a negative number. Yeah, Stitch Fix missed, down 40% now. It was down 30% when I saw it. Average number of paying customers, I believe, was higher, but overall, not good for them. And that's a tough company. It's not, they're not just raking in the profits, so they can't afford to miss by earnings on too much there, but they did. Yep. Oh, yeah. Cool. You dip your toes in Win. Yep, I've had some of those questions today. Some of these hard-hit areas, like do you dip your toe a little bit? I don't blame you. Win, MGM, the cruise lines, the airlines, I don't blame you for wanting to dip your toe there. I like that you said that instead of saying, I just think this is the bottom and I'm going all in. I don't think it's time to do that. Yeah. Oh, yeah. Bear markets are always much shorter than bull markets. We actually covered that. So in that market decline statistics, we went through every one of them. How long did they last? How long was the drop? How long was the recovery? And how long to get back to square again? I've covered that a few times, actually, for our customers. But bull markets are always longer than bear markets. I believe every one of them is longer over history there. Yep. Hey, I know Zoom's getting a lot of attention for the whole, work from home sort of thing. Amazon now sending everybody home in New Jersey and New York. The trick part is valuation here. I mean, is it really worth that much? I mean, I think you kind of found peak valuation at that 125 area, and that's why you see it kind of resting here for a little bit. Yep. You got a sneaking suspicion that Slack is going to beat on earnings, huh? You wouldn't have any inside information there, would you? I can't speak to that. I don't know if they do or don't. I know that the competition between them and Teams, Microsoft's Teams, is a little bit overblown, in my opinion. I think it's overblown. I think that Slack's got the upper hand for now. It'll be a while before Teams really plays catch up. I see the marketing, by the way. They're out there trying hard, but I don't see it. I don't see Teams really making a big dent for now. So what are some good deals out there with all that saving I've been doing? Good deals out there. I like a broad investment here. I like picking a broad sector. I like picking maybe broad markets. Maybe you like the Russell 2000. It's sold off the most. If you like picking individual stocks, you really need to have a reason. And pretend that you're talking to me. Pretend that I'm going to give you the okay or not before you buy a stock. So if you're going to buy an airline stock, you can't just say, well, I like it, it's sold off. Give me something. Is it the highest yielding one? Is it the largest by market cap? Do they have the most cash on their balance sheet? Give me something that makes me go, okay, yeah, that does justify this one versus that one. Are you going to go with regionals versus the global, United, things like that? Are you concerned about the 737? Things like that. I want to hear things like that before I would consider individual stocks. You got to be very, very choosy here if you're going to do individual stocks. It just requires a little more research. Yeah. Yep. Citrix. Yep. They same thing there. They're doing well. With the work from home there. Oops. CTXS. You can see you can't see anything. You can see the very quick recovery up off the lows there as compared to the other markets, and that's going to be partially due to their work at home. The WebEx is what theirs is called. Yep. Cool. Well, hey, we covered it, man. We went through it. Boeing. Did I mention Boeing? Boeing made new lows today, down 13%. The FAA, this is according to the Wall Street Journal, so I don't know that this is accurate, but they're saying that the FAA is going to require that they fix the wiring issues before getting the plane back in the air. They previously said that wasn't a concern, but now the report is that they're going to have to fix that. So the stock lower on a down day in general there. You can see it down 13%. Yep. I love it. Thoughts on Ford? So Ford, I know every analyst is still positive. They're all very excited about that. I've seen no interesting downgrades or anything like that. They've been positive since $8. Right? You're sitting at $6. So 10% down day for Ford today. Yep. How long for Carnival Cruise to recover? That's a tough one, right? You got to expect that we're still going to see more increases in the number of cases. The government came out over the weekend and said, don't go on cruises. Like, there's no reason to, don't do it. I believe they even said they would reimburse you if there was any fees you encountered for that. The government, I don't know how that's going to work, but so that's a tough one. That's not going to be something that just recovers overnight. Now, in the short term, you've got a very, very extended downturn there. So you're going to see it bounce off the lows and find a point where it settles. It's not going to settle at the lows there. No stock does that the way you would think, but that's, the emotion of it. Yep. Oh, yeah. You think Slack's going to be, well, you're awfully bullish on Slack. Hey, I'll cheer it on for you, man. I hope it goes well there. We will we'll cover it when they report their earnings there, so we'll see what happens. Other than that, good job today, right? If you didn't need a towel today, I waved this towel around. Nobody's asked me for a towel. I always offer to send this to customers, but if you didn't need something like this today, good job. You went through a record day and managed to come out without any sweat on you, right? Looking good. All right, we'll be back tomorrow to cover this all over again. I appreciate you guys watching. I just thank that you're here. If I helped you in some way, hit the subscribe button. That really helps us out there. Appreciate you doing that. And we'll be back tomorrow. Do this all over again. Is it Turnaround Tuesday tomorrow? Seems that the stats say that that's the case. Let's see what happens.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.